There are 19.6 million Bitcoin out there right now, and the highest it will ever go is 21 million. There's real scarcity value. And what is going to happen? The price increase for every institutional dollar pushing in now is going to be much higher than it was last year, 2 years ago. It's, we're going to get into, if these institutions really want to own it, what I found fascinating recently, just learned it this morning, is...
In a perceptive interview from the previous year, Cathie Wood, the brilliant founder, CEO, and CIO of ARK Invest, took a strong stand on Bitcoin. ARK Invest, under Cathie's leadership, an exchange-traded fund manager that specializes on actively managing ETFs with a disruptive innovation focus. Cathie Wood and her company have shown a notable dedication to Bitcoin, and her excitement for the top cryptocurrency asset has only grown in light of the astounding performance of spot Bitcoin ETFs. Cathie presented a positive case for Bitcoin at a thought-provoking conference held by Singularity University a few years ago, predicting an astounding $1.5 million worth for the cryptocurrency by 2027. Cathie is upbeat and says there is still possibility for Bitcoin's value to rise even more as we quickly approach this milestone. In a recent interview, Cathie dives into the extraordinary increase in demand for Bitcoin through spot Bitcoin ETFs with Peter Diamandis, a well-known American marketer, entrepreneur, and co-founder of Singularity University. She thinks that this increase almost assures a significant price increase in the upcoming years. In fact, Cathie believes that during the next 36 months, the price of the top cryptocurrency will skyrocket by 23%. Cathie contributes to the discussion by discussing the achievements of her company's ARKB Bitcoin ETF, which received approval from the U.S. Securities and Exchange Commission in January. According to current statistics from BitMEX Research, Arkansas KB is a noteworthy Bitcoin ETF that ranks third in terms of total assets. It has a remarkable $2.038 billion in assets and $1.563 billion in flow. Even with their present success, Cathie believes these ETFs will continue to develop, particularly once a critical group of brokers begin to sell them to their customers. Let's hear what Cathie Wood has to say next.
Bitcoin, congrats on your ETF. It's done very well. You're number 3 now?
Number 3. This was David against Goliath. And, so this is a very nice win for us. Now, we're not finished. And in fact, in our business, what's interesting is the wirehouses, which dominate our customers. So Morgan Stanley, all the advisors at these wirehouses, Morgan Stanley, UBS, Merrill Lynch at B of A, Wells Fargo, not one of them has approved Bitcoin on its platform. That hasn't even happened yet. And those are our primary clients. When that happens, wait until you see.
Explosion.
This is not just a technology. It's a new asset class, right? And beyond that, it's a global monetary system. It is the first global, private, meaning no government oversight, digital and decentralized, rules-based. That's the most important word here. Rules-based monetary system in history. It's a big idea. It's, we're going to get into, if these institutions really want to own it, what I found fascinating recently, just learned it this morning, is typically when you go through a price move, a Bitcoin price move to the upside, you usually see long-term holders, which is a metric we monitor. It's an on-chain analytics metric, and it means people who have not moved, or wallets that have not moved their Bitcoin in 155 days or more. Yes. Well, normally when you go through a price move to the upside, a very nice one like we've seen in the last year, that tends to start moving down. And it did that, true to form, but it has reversed in recent days because what we learned is GBTC sold some of its Bitcoin. So those wallets hadn't been changed in a long time, right? Now that is done, at least for the time being. Now that is done, and it's going back up again as the price goes up. That's highly unusual. And I think it is because the long-term holder is saying, why would I sell now when I know all these institutions, which own nothing in this realm, in this new asset class, they have to consider it because it is a new asset class.
Cathie is looking forward to a momentous time in the history of cryptocurrencies. She sees a paradigm-shifting adoption of spot Bitcoin ETFs by wirehouses connected to big financial institutions like as Merrill Lynch, Morgan Stanley, and Wells Fargo. She is convinced that such a move would be historic for the cryptocurrency industry as a whole, Arkansas KB, and other Bitcoin ETFs. The good news is that we could be closer to this time than we think. According to recent Bloomberg reports, Wells Fargo's Wealth Management Division and Merrill Lynch, the financial division of Bank of America, have taken the initial steps by providing select clients with access to spot Bitcoin ETFs. According to people with knowledge of the situation, customers with brokerage accounts that are interested can now seek access to these Bitcoin ETFs. Furthermore, it has been alleged that UBS Group is offering some authorized spot Bitcoin ETFs to particular wealth management customers without soliciting their business. Remarkably, the Bloomberg article reveals that Morgan Stanley is considering adding spot Bitcoin ETFs to its offering. This prospective action, which comes less than 2 months after the introduction of Bitcoin-based products, represents a notable reversal of direction by major financial organizations. Their quick adaptability highlights the remarkable market success these items have had. She offers further perspectives on the impending rapid expansion of disruptive technologies, illuminating the changing landscape that holds the potential for revolutionary breakthroughs.
In the financial world, exponential, that concept, the last time investors heard it was during the tech and telecom bubble. And for them, that ended badly. Now they just don't believe it. They don't believe it's possible to sustain growth rates at 15, 20, 25% plus per year. But what we think is going to happen is not exponential growth, but super exponential growth as we get the convergence between among technologies out there. We think in the next 5 to 10 years, you will not recognize the world as we know it today. When we're trying to help people understand the same thing, again, not just investors, but anybody, we often say the last time we had multiple innovation platforms evolving at the same time was in the early 1900s, late 1800s, early 1900s. And absolutely right. That's what, got everyone off the farms and into the new world, right? This is the same, but it's on steroids. People are scared. And they are hugging benchmarks because they don't want to go through another tech and telecom bust. They don't want to go through another financial meltdown. People are talking about, another technology hype cycle here. So these are trigger words for them right now. So here's the irony. In the late 90s, I was there. In the late 90s, this idea of the internet captured the investors' imagination, and they started valuing companies on number of eyeballs potentially in 10 to 20 years. Too much capital chased too few opportunities too soon, and it ended badly. The technologies weren't ready and they were too expensive. But what people do not understand is the seeds for everything happening now were sown during the 20 years that ended in the tech and telecom bubble. They've been germinating for 25, 30 years. We are ready for prime time. And unlike the late 90s, they're running away. They're running for the hills. What are the hills? They're benchmarks. It's ridiculous.
When Cathie Wood talks about exponential growth in the financial world, she talks about investor caution because of the dot-com bubble's historical background, particularly the Tekin telecom era. Wood presents the concept of not only exponential, but super exponential growth, driven by the confluence of multiple technologies during the next 5 to 10 years, acknowledging the cautious feeling that was common among investors who saw the aftermath of that period. Wood draws astute comparisons between the revolutionary changes of the late late 1800s and early 1900s and the upcoming technology revolution. Innovation platforms changed social conventions during that time, enabling individuals to leave conventional agriculture and enter a new world of options. Wood highlights how drastically the world will change, predicting that it would shift to such an extent that it will no longer resemble the current state of affairs. Speaking to investor concerns, Wood observes that many are reluctant to welcome this impending surge of innovation because they are still traumatized by previous financial crises, especially the dot-com crash and other market collapses. Fear-driven investors are presently holding on to benchmarks in an attempt to prevent another tech-related market crash. Recalling the late 1990s, when internet-related excitement led to inflated values based on the amount of eyes, Wood draws attention to the nonsense of the situation. She does, however, note that because these developments have been developed over the last 25 to 30 years, they are essentially unique. Don't forget to like and subscribe for more videos like this. Until next time, happy investing.